So welcome back to a new video. Today I want to talk about Judas swing since a lot of people ask me about that in my DMs. Judas swing is a strategy that is really simple and really similar to the strategy I talked to before, I think, but I will still go over it. I really want to make a video about it for a long time, so I will just do it for today since I don't really know what to upload else. I talked about nearly everything. I think I'm gonna start uploading like trade recaps or forecasts for the week, but for now I will just go over the last things that I can remember of kind of guides or tutorials, and then we will go over into recaps only or stuff like that. Maybe some new format, but we will see in the future. Okay, let's say this is our Asia session that we normally mark here as 1 a.m. and 9 a.m. in German times. So what you essentially do in Judas swing, so you have your normal movement, we have like this for example, this, going into the consolidation right here because of Asia. Obviously this is a really clean consolidation, it won't be like that. But then we have something like this, then we bounce down here, and this is where we take our entry and we actually aim for Asia high. So something like this, you know, where we aim here and make our stop loss below this. Since we want it to take out an SSL going into a high time frame POI. And POI is just a order block, fair value gap, something like this. And as you can see here, we have like a good order block that we can use. And then we enter and we aim for the high of Asia. I would also take a fixed range volume profile from the lowest to the highest point here and take it from whatever the point says as the first TP, since this is a point it can most likely go to. It's probably even matching with like a thing here. So this is the first TP you should take, and the second TP should be at Asia high. And this is already it. We can maybe go over bearish examples. So let's say we have our path here, something like this. I don't know, this. We go into the Asia consolidation right here. We take it out into fair value gap kind of thing. We enter based off here. By the way, the entry can be optional. Like you can base entry based off an burger structure, but if you want a fair value gap into fair value gap retracement, which is a higher win rate but less risk reward, you can also do that. We're gonna do it with that for this time. And same thing here again. We go here, make our short, maybe after the fair value gap reaction with some breathing room, aim for this and also the volume area here. So you have our two TPs, both hit, and this is how it works. I want to quickly introduce my partner, my flash funding. I'm not just saying this because they're my partner. I really like this prop firm and I think it will be one of the biggest in the future. They have such a small profit target by just 6%, which is easily obtained by just two 1 to 3 risk reward trades. And if you want to get yourself an account, this is my code. Link is in the description, and let's go into the video. So we're in GU now, and we're gonna make it with the last thing that we see here. And this is all also okay. Here's the London Open, but you can take this if it's like on the point. It's exactly taking liquidity on the open. This is fine, so I'm gonna take this. And the real consolidation from Asia would be this area. You have to identify the right consolidation. Even though this is still Asia, I wouldn't see it as a consolidation since here it stopped and sometimes it varies. The open isn't always completely right, since the open is just the found numbers. I guess I don't know how to say that, because opens are just that a lot of people are active in the market. There's a lot of volume. It's not like at exactly 9 there will be a lot of people. It's around that time. So if it takes liquidity around that time, it's also fine. So we could also see this as the open. And that's why you should always wake up 1 hour before the open. I normally do this and analyze here already, even though the open is here, okay? But it's always like different. So we also see that we take out this liquidity right there, which is really good, and make it a bigger liquidity before the open, which is also really good, but I want a different color. So we take out this liquidity, which is one high time frame POI. If we take out another liquidity, then we don't even need the fucking other POI. I see that as a good POI too, even though here there will be a good order block that we went into. If we go in lower time frames, you will see that here is an order block. And this is just a really clean example of what we did. So we have our, where's the path tool once again? I don't find the path tool. Here. So we have the consolidation right here. As you can see, we're bouncing around that. We're going to take out this this buy side liquidity. We fake out one more, so this is a better liquidity. We go into this order block, and then we go completely down, and we go for this liquidity, and probably the volume area. Obviously the volume area here. So you could even take 3 TPs here, since this was a really good liquidity as well. But all of them would have hit if you make your short position after the fair value gap retracement here. Make stop loss with some breathing room here. Aim for this at least. You can also aim for this, but just for rules and backtesting, I would only aim for the consolidation low. Even though this looks good, but you want to have some strategy that you can repeat and repeat without changing stuff all the time. So I would like to only aim for the low here and don't variate in the take profits you take. I would always take the same take profits, so the whatever comes out of the trades is less gambly, because you have you tracked it back in the past with backtesting and found out that it works for you. So I would always make the same thing, even if that looks good, okay? Because sometimes it won't work, and then you miss out on profits here just because this didn't work. So I would always only aim for the consolidation low, which is good. But yeah, this is a good example of it. And you could even, no, I don't like, if I see, you could always also do that if you see London being a consolidation. You could also do the same as you did in Asia with London. But as you can see here, even though it has like an impulsive move, it took liquidity and turned, but I don't like this. I would only trade it if this is actually consolidation. Same for Asia, by the way. If Asia is not a consolidation, I would not trade it. You always need to identify a consolidation where a lot of liquidity is built up. As you can see here, if we go here, you will see that we have a really good consolidation here. There's a bounce here, making a clear bottom, clear. It stays in this box all the time. All the wicks are just like kind of proving my theory of this being a consolidation, but this comes with market experience to identify good consolidation. And what makes it even better is that we actually had like a consolidation here as well. The PA was really consolidating around that time, not even only in Asia, which makes it even better. And a spike up here not mitigating this order block, which makes it even better, because before the order block we had a liquidity that got swept, and also it bounced here, which made it even bigger liquidity. A lot of support resistance people would have entered here. Stop loss right above it and aim for the next support that they see, something like this. Or I don't know how they trade, maybe here. No, I don't really trade support resistance, but it's about a stop loss that you need to identify, not to take profit. So I would see that it's here, and I see, oh, okay, it goes down and up. Support resistance get taken out. We went into the order block. Fair value gap created because of impulsive move, reaction of that fair value gap. We enter, we aim for that low, and bam, this way already 1, 2, 4 risk reward that easily. It wasn't hard to identify this strategy. It's not a hard strategy. Trading is not hard, okay? It's about market experience and confidence in the market, because this is the most important things. Even I could teach my little brother how to trade. It's the market experience that makes a difference, and also the confidence in the market. If you don't have confidence in a trade, even that sounds stupid, okay? The confidence is really important. You will take less better trades if you have confidence. It doesn't feel like right, but it is. I didn't have confidence in the market because I lost in a row, and then I just went onto a big lose streak, you know? This is just confidence. Even though you wouldn't think it is, it is. You will take worse trade if you have no confidence in the market. So don't trade if you're currently scared of price action or something. Then go back testing until you're confident again. It's just that. Be confident, market experience, stay with one strategy, trade every pair. That shit doesn't matter, okay? You will find better setups if you look at every pair every day, and don't overtrade, don't over risk, or journal. This will make you profitable. All those things. And this is the video. I hope you liked it, and I hope you understand Judas swing now. If you don't, just ask me in the comment section. You could also join my Discord server, where I'm, by the way, hosting giveaways every second week for funded accounts. There I will be answering every question as well. See you. Bye bye.